Welcome to the August Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, reports in late July showed that the economy lost both speed and altitude in the second quarter. Many economic indicators showed slowdowns, with concerns about wages, jobs, Washington and Europe being key drivers. Which do you think had the largest impact, and which might be the first to start to turn around?
Well, I think the first thing we should say is we've seen this 3 years running now. We've seen a strong first quarter and then we've seen a slowdown, and in every single case, the reasons have been external factors. The underlying economy, in my opinion, is healing. I actually have numbers to support that, but you do have these external factors affecting growth and affecting decision making. What we're seeing this time around is uncertainty is the driving principle. Uncertainty about Europe, which continues to simmer. More importantly, though, is the uncertainty about the fiscal and tax situation in the United States. We have several issues pending. We have the upcoming debt ceiling debate, which will probably be hitting around Labor Day, even though that was supposed to have been put off until after the election. We have the upcoming fiscal cliff, which, if nothing is done, will put us back into recession next year. We have the upcoming tax expirations, which are part of the fiscal cliff, which will change business decision making. Consumers are pulling back because of this uncertainty. Businesses are pulling back because of this uncertainty. But at the same time, the underlying economy does seem to be ticking along despite that.
How are markets responding?
The markets are actually responding surprisingly well. We actually made a little bit of money in the equity markets in July. The problem is the uncertainty is showing up in the fixed income markets. We've seen U.S. Treasury yields drop to all-time lows, reflecting a flight to safety. So we've also seen tremendous volatility. We have a situation where, even though we eked out a win, we did see significant volatility over the month, and the recoveries were largely driven by governmental statements, which means that it's a very uncertain market that's really susceptible to fear that external events can have an effect.
How are international markets faring relative to the U.S., given the concerns in Europe and slower growth in China and India?
Again, surprisingly well, all things considered, but a big part of that, again, is governmental action. And the best example of that is the recent announcement by the European Central Bank that, in fact, they would do, quote, what it takes to support the euro. Now, that's a pretty strong statement from a fairly powerful institution, and that obviously gives a fair degree of comfort to the markets. And you've seen that in the recovery in many of those markets. Again, volatility, but overall, and at the end of the month, a win. The question we have to look at going forward is whether, in fact, they're going to be able to do what they say they're going to do. I mean, we've seen announcements like this before, but Greece continues to cook along. Spain got worse over the month. That was what prompted the statement in the first place. And the problems elsewhere in Europe have not gone away. So again, we've seen markets calm down, but the underlying reasons for the uncertainty haven't gone away.
And what are you keeping your eye on over the coming months?
I think an important thing to look at domestically is employment. You have a situation where, even though employment growth has not been what we would like it to be, there are reasons to believe it actually is a bit stronger than it looks. Hours worked have gone up and wages have gone up, suggesting more overtime, which at some point is going to have to translate into more hiring. You're going to have to look at the German Constitutional Court decision on September 12th. That's going to be a huge indicator as to whether the European rescue can go forward. And you're going to look at the actions of the European governments going forward. Those are the two big things that we need to look at right now, combined with, of course, how Congress reacts in the next couple of months.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.